Good morning, this is Dave Toth with an RJO MRT Technical Webcast update on the energy complex for Monday, May 2nd. Starting off here with a 4-hourly chart of the June crude oil contract, you can see the current rebound from an overnight sell-off low of 110.82 in which the market respected our recent short-term risk parameter at 110.71, that area being the 38.2% retrace of mid-April's 106.01 to 113.48 rally, and also an area of former resistance from earlier in April at 110.67 as new support. By virtue of this current rebound, we believe the market has reinforced this entire 110.71 area as the near-term risk parameter from which short-term traders with tighter risk profiles are advised to manage the risk of a continued advised bullish policy. This continuation, in this regard, we believe the past week's mere lateral price action is considered corrective and consolidative. That reinforces at least the intermediate term resumption of the secular bull trend from the 105.98 low from early in April. That exposes new highs above Friday's 114.18 high. From a longer term perspective, looking at the daily log scale chart here, you can see the past couple of weeks, past 3 weeks, resumption of the major bull trend following its breakout above former resistance from a 106 handle that is now considered new support in general, and specifically 105.31, the corrective low from April 13th. In lieu of weakness below that level that's needed to confirm a bearish divergence in momentum of a scale sufficient to threaten the major bull trend, a broader bullish policy remains advised. These issues considered, a bullish policy and bullish exposure remain advised with weakness below at least 110.70 and preferably 105.30 required to defer or threaten this bullish call. Similarly, looking at the June contract on a daily log scale basis of the RBOB market, you can see by virtue of last week's continuation of the secular bull trend, the market has defined former 327 to 329 handle resistance as new near-term support. We'd expect the market to sustain above if this market is still truly strong. And on this larger degree scale, a break below the 316.17 corrective low from April 19th is required to confirm a bearish divergence in momentum of a scale sufficient to threaten the major bull trend. In lieu of such weakness, the a long-term bullish policy remains advised. From a shorter-term perspective, looking at the 4-hourly chart here, you can see the past couple of days lateral chop. That, within the context of the secular bull trend, is advised to first be approached as corrective and consolidative ahead of a resumption of this major bull trend, with former resistance new support from the 330 area in general and below the 329.79 corrective low from April 27th required to even defer this major bull trend. And in this regard, shorter-term traders with tighter risk profiles are advised to trail protective sell stops to levels just below that 329.79 corrective low. In lieu of such weakness, further and possibly accelerated gains are anticipated straight away. And longer-term traders, again, are advised to maintain a bullish policy until or unless the market fails below 316.17. Finally, looking at the heating oil market, you can see on a 4-hourly intraday chart the market's recovery from our 316.18 corrective low from April 25th that we believe minimally the market needed to fail below to expose the past week and a half's recovery attempt as a three-wave and thus corrective sequence within a broader move lower, while the market remains above at least this 316.88 corrective low from last Monday, and especially the 313.25 low from April 19th. We believe all this price action down from April 8th 333.72 high is corrective within that reinforces the secular bull trend to eventual new highs above that early April high. From a daily log scale chart, you can see the market's success in sustaining gains above the former 310 area resistance that we expected to provide new support. It's playing that role thus far quite well, and we believe that perpetuates or is consistent with the secular bull trend that exposes new highs above that early April high at 333. Longer term, in this regard, longer-term traders are advised to maintain a bullish policy with weakness below the 313.25 corrective low from April 19th, minimally required to expose enough of a bearish divergence in momentum to threaten the secular bull trend and warrant moving to a neutral sideline position. In sum, a bullish policy remains advised across the board with weakness below at least 316.80 $313.88, and preferably $313.25 required to defer or threaten this bullish call. Please stay tuned to updates on these and other markets on our RJOMRT.com website, and good luck with today's trading.